Welcome, G traders. Markets in Australia and New Zealand are closed today for Boxing Day, while currency movements have been largely subdued on the day after Christmas. The final days of 2023 may go surprises. For example, the main feature of the pre-New Year's trading is a so-called Santa rally on Wall Street, considering the fact that the US dollar was near its 5-month lows today. A rally in stocks is quite possible. In Asian trading, the US dollar index was down within the range of 101.50 and 101.70, losing ground for the second week in a row. And today, the index plunged below 102 points. Expectations of an imminent reassessment of monetary policy in the United States are boosting risk appetite in the equity markets. Falling yields on the US Treasuries are pulling the US dollar index deeper into bearish territory. Therefore, the greenback may lose more than 1.8% in the week before the new year. After Friday's inflation reports, the situation for the US dollar looks increasingly predictable. As the US inflation fell below 3% in November for the first time in more than 3.5 years, expectations for a quick turn around from the US Fed increased and further weakening the greenback. However, the US dollar has been trying to find a foothold today in a holiday weekend market. Notably, the slowdown in core inflation has its drawbacks, such as a growing fears of recession in the world's largest economy. Perhaps this is why the Fed speakers had changed their stance, and they talked about the prospect of high rates for a long time, and now the Fed does not intend to keep high rates for too long. While the US dollar index is correcting, one of its major currency counterparts has also received a boost from its monetary authority. The Japanese yen strengthened after yesterday's speech by the country's central bank chief. Yesterday, Kazuo Ueda said that would move a shift away from monetary easing once it becomes confident about achieving its inflation target. Given that policy has kept the Japanese currency under pressure in 2022 and 2023, this prospect has helped to boost the yen. Kazuo Ueda's hawkish statements contrast sharply with those of other officials, and this includes Akira Amari, one of the architects of the Bank of Japan's foreign policy, the so-called Benomics, and the Takako Masai, who served on the board of governors of the Bank of Japan from 2016 to 2021. The latter believes that the current head of the department has already confused markets into believing an exit from ultra-loose monetary policy is imminent. The expectations of an exit from the Bank of Japan's current settings are still very premature. As you can see from the chart, the Japanese yen has lost some of its footing after yesterday's steady decline. In addition, statistics released today showed that the unemployment rate in Japan remained unchanged at 2.5% for the month, and the inflation rate in the services sector also remained stable at 2.3% for the last month. As a result, the dollar-yen pair was under bullish pressure today, rising to the 142.40 level. Despite the green figures, the yen was still holding near its recent 5-month high early Tuesday. During the Asian session, the pair corrected within the daily range of 142 and 142.40. If the bearish momentum continues, the pair may advance toward the key psychological support level of 142. In the case of strengthening of the US dollar, it may test the resistance at the 142.50 and the 143 mark against the yen. Against the backdrop of a sluggish risk sentiment on the stock markets yesterday and today, The antibody currencies movement is driven mainly by the US dollar, while the greenback loses ground for the second week in a row, falling to new monthly lows. The Aussie and Kiwi are showing significant gains. And as a result, the Aussie reached its highest level since July of this year, trading above 0.68 today, and the currency was range bound between 0.6790 and 0.6820 during the Asian session. The next technical support and resistance levels are 0.6777 and 0.6890 respectively. The Australian and New Zealand dollars were also boosted by today's jump in oil prices. As a result, the Kiwi continued to soar in the range of 0.6290 and 0.6330 during Asian trading. Maintaining bullish momentum, the Kiwi-dollar pair may continue to rise towards the key resistance level of 0.64. And the next technical support levels are located at 0.6300 and 0.6250. And that's all for now. Stay tuned for the more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online next week.